to Tajudeen Ibrahim, who is the Director of Research and Strategy, Chapel Hill, Denham. Hello, Tajudeen, and thank you for joining us on today's edition of the program.
Hello, Nancy. Thank you so much for having me on the show today.
Fantastic. We're talking monetary policy. Monetary policy has really been in the eye of the storm since Cardoso took over. I think Cardoso took over in September, if I'm not mistaken, perhaps September 26 or so. But whatever, I think it's September. Um, do you, what do you think about the silence of the Central Bank of Nigeria around monetary policy meeting? Because it's been postponed again, but we do not have official confirmation to that. Of course, we know that MPC would have been held in September and as well as November. But what do you think about the silence? It's loud, isn't it?
Yes, it is indeed a loud silence, and I want to say that that is not the best for us as a country. That is not the best for us as an economy, because monetary policy is something that is of an international interest. The interest of investors is in this monetary policy by local investors, by foreign investors, and also by businesses, across the country. So it is not the best that we have not done anything since we have a new, CBN governor. And I believe that, it is also not the best that the governor has not been able to address the public since, his appointment. So those are my views. I think Nigeria can actually do better than that. I think the central bank as an institution can actually do better than what we currently are seeing, not only because of the local concerns, but also, largely speaking, because of the concerns of the international investors and the way they will perceive us as a country, the way they will perceive us as a country of investment destination, which is something that we really want to brand ourselves for and be known for, to investors. Yes.
What do you think that this silence means? How would you interpret the CBN silence? Because for me,
If
I'm looking at it at from different perspectives. And let me give you my own analysis of it. Perhaps Cardoso and his team is trying to understand the troubled waters which they are on right now. Also, perhaps trying to consult with stakeholders and all of that. But I'm not the mouthpiece of the CBN. And just like we said, that the silence is just so loud. And it's like, the Cardoso is like ignoring the rest of us, although we don't know what is
so
happening there.
I wouldn't say that Cardoso is ignoring the rest of us. But what I would say, what I will also reiterate is that Cardoso indeed and the central bank as an institution can actually do better than what we currently are seeing in the country with respect to monetary policy committees sitting to make monetary policy decisions. And my sense also is that if I were to interpret this loud silence just the way you described it, I think it is a form of confusion for the economy, for businesses, and because it puts them on a hold in terms of what should they expect from the new governor. They are everybody nobody has a clue around what will happen in terms of the magnitude of interest rate increase. I think most of us in the financial market or in the capital market understand that there is need for us to sustain a tight monetary policy. But we lack clarity around the magnitude of the expected increase in interest rates. We have the monetary policy rate currently at 18.75%. We do not know if the increase will be 100 basis points or it will be more aggressive and go to like 200 basis points. This is something that should have materialized if those two meetings, that they were meant to have had, if those two meetings really happened. By now, we should be clear. Businesses by now will have had an idea around what is their new cost of borrowing. The banks by now will also be clear around what is the cost of funds to them. And they will also be clear around their revised lending rates. So all those elements are what the market, the institutions, the banks, businesses generally speaking are expecting. That is from a business standpoint. From an investment perspective, let us bring in local investors in this case. Nobody in the market is clear around how much yields are going to climb on the back of monetary policy decision. The international investors are also not clear by how much it is going to, increase. We all know that it's going to increase, but we lack clarity, and lacking clarity is not the best. I believe the CBN can actually do better than what we currently are seeing, so that businesses can plan according to monetary policy decision. And investors can also take advantage of whatever decision is made on time instead of getting it delayed. And mind you, if we are unable to carry the foreign investors along as appropriately as we should, they will look at other financial markets across frontier markets, across sub-Saharan Africa. Those are my views.
What do you think is the greatest challenge facing the Central Bank of Nigeria at this time in terms of even handling monetary policy? The MBS just released a few days ago inflation at 27.33%. What's their greatest challenge? One. Then number two, how do you think that the Central Bank of Nigeria should balance interest rate hike as well as growth?
I would start from the second question, which is trying to balance between interest rate and growth. We all should remember that we are talking about the Central Bank of Nigeria in this case. We are not talking about the federal government of Nigeria. So there is some level of independence that, naturally speaking, the central bank should be enjoying. If we stay by that independence, my sense is that the central bank has no other tool to use than to, implement, interest rate hike with the increases that we are seeing in inflation. When we talk about orthodox monetary policy approach, there are other, tools that they can use. They have the cash reserve requirement. They have the loan to deposit ratio for the banks. They also have the almost sales, that they also use as some of their major tools to control, monetary, to make monetary policy, decisions. But my sense is that interest rate hike or reduction passes a more effective message compared to those other tools. The second thing around that is that we have an environment where money supply is rising at a much faster rate compared to the consumer price index, which we call inflation. On an annualized basis, money supply has risen by 35%, whereas we have inflation at around 27.33%. What does that tell us? That tells us that there is some element of demand pushed inflation in what we currently are seeing in Nigeria. It is not only pushed by cost this time, given the empirical evidence around money supply. And when money supply is running at a much faster pace compared to output, you would, in that environment or that economy, continue to see high inflation. It is the law of economics, and that law stands, and it is reflected in what we currently are seeing in Nigeria as we speak. But I reckon that the CBN also wants, Nigeria to record, robust growth to support, whatever the fiscal policy is doing. But I think this looks more like not the right time, in my view. This is a time that the CBN has to maintain its independence, to maintain its credibility, and it is a time that they have to do what is right in terms of monetary policy. Of course, there'll be a time in the nearest future when the CBN will be able to cut interest rates, when they will be able to accommodate liquidity glugs in the market. At that point, we should be talking about much lower interest rates for businesses to borrow. We should be talking about much accommodative environment for businesses to grow. But for now, I reckon they just have to do the needful, in my view.
Um, Part of the challenge that the central bank has too is in terms of its balance sheets, because I, if you recall what happened at least in the last 2 to 3 months, of course, where we saw the Apex Bank releasing its accounts, and there was a lot of uproar across the country in terms of, okay, the Apex Bank not releasing this for the past 7 to 8 years. How do you think that the balance sheet should be cleaned and as well as maintained, vis-a-vis that this is an Apex Bank that gave so much money to the fiscal authorities, especially during COVID, gave President Buhari money. In fact, President Buhari is the worst president in terms of, ways and means advances from the central bank to the fiscal authority. So how do you think that that can be addressed now with the new leadership?
I think if we look at the balance sheet of the central bank, one thing that we all have to recognize is that that balance sheet has been somewhat overstretched. And for that balance sheet to be normalized, it will take a bit of time. The starting point, and I think they're already doing some work around it, is to ensure that the ways and means, for instance, is converted to a long-term loan or long-term debt, that the federal government of Nigeria is owing to the central bank. And I believe that that is something that has happened. I think the next thing after that restructuring is discipline, a disciplined approach, to borrowing, a disciplined approach, to managing expenses of the government, so that when they are under pressure in terms of revenue, they are able to be a lot more disciplined and a lot more cost efficient, so that to be um, they do not have to run to the capital market too often, or run to the CBN too often, for debt. If we indeed are disciplined, I think that is another element and side to it. For you to be disciplined as a government, you need to recognize your pressure in terms of revenue generation. And I like the fact that the presidency has identified the need for us to raise tax revenue. There's a special committee in place for that. And I have listened to the chairman of that committee. Personally speaking, I can tell you that the outlook is bright on the tax revenue side. If we maintain the momentum on that side, and we also ensure implementation of those of the recommendations of the committee, my sense is that by 2024, Nigeria should have a much larger revenue that will make them to be more disciplined in terms of
Okay.
leverage in the market and also from the central bank.
Thank you very much, Tajudeen, for joining us this morning and lending your voice to the monetary policy conversation. Thank you very much, Tajudeen.